Welcome to Money Ocean Channel. And in today's fast-paced world of technology and investing, one question is on the minds of many. Is now the right time to invest in Alphabet stock? With Alphabet, the parent company of Google, YouTube, and Waymo, at the forefront of the tech industry, the stock's performance is a critical topic for investors. But with so many factors in play, including competition, market volatility, and regulatory pressures, understanding whether to buy Alphabet stock right now requires a deep dive. Let's start by acknowledging that Alphabet is a giant, a titan in the world of technology. Whether it's search, advertising, cloud computing, or even autonomous vehicles, Alphabet touches almost every corner of the digital economy. Google itself, as a search engine, dominates the global market with no real competition in sight. YouTube, as part of Alphabet's portfolio, stands as the go-to platform for video content with billions of users every month. But it doesn't stop there. Alphabet's ventures into artificial intelligence, self-driving technology through Waymo, and even healthcare innovation are expanding its influence. However, like any major company, Alphabet faces significant challenges. Competition is fierce in the tech space. Rivals such as Microsoft, Amazon, and Meta, formerly Facebook, are always innovating and pushing boundaries, trying to chip away at Alphabet's market share. For example, Amazon is a massive player in cloud computing through AWS, and Microsoft continues to strengthen its position with Azure. Alphabet's Google Cloud, while growing, has to constantly evolve to stay relevant in this competitive landscape. And in the world of advertising, Meta remains a formidable rival, making it essential for Alphabet to keep innovating with new ways to monetize its platforms. But it's not just competition that Alphabet has to contend with. Regulatory pressures are another significant issue. Governments and lawmakers, particularly in the US and Europe, have increased their scrutiny on tech giants like Alphabet. Antitrust lawsuits, data privacy regulations, and concerns over monopoly-like behavior have become part of Alphabet's daily landscape. These regulatory challenges have real implications: fines, forced changes to business practices, and limits on growth. Additionally, regulators are increasingly concerned about Alphabet's vast amount of user data and its potential influence over public discourse. These hurdles may not derail the company, but they do present ongoing risks that investors must consider. Then, there's the issue of market volatility. Tech stocks, including Alphabet, are not immune to global economic shifts. A sudden downturn in the economy or a crash in the stock market could severely impact the value of Alphabet shares. This is particularly true given that Alphabet still derives a substantial portion of its revenue from advertising. When times are tough, businesses tend to reduce their ad spending, which could result in lower revenues for Alphabet. This vulnerability to economic cycles is something that any potential investor must take seriously. Yet, despite these challenges, Alphabet's financial health remains solid. The company's revenue continues to grow year over year, thanks in large part to its core search business. Google Search is a cash cow, driving billions of dollars in ad revenue each quarter. But Alphabet isn't just relying on ads. Its investments in Google Cloud, hardware products like the Pixel phone, and other ventures are starting to pay off as well. For example, Google Cloud has shown impressive growth, positioning itself as one of the major players in the cloud services market. Meanwhile, Alphabet's forays into hardware, though smaller in scale compared to the likes of Apple, still contribute to the company's bottom line. Now, let's talk about Alphabet's profitability. The company consistently maintains a healthy net profit margin, hovering around 20%. This is crucial because it shows that even as Alphabet invests heavily in new ventures, it remains highly profitable. Its cash reserves are also enormous, giving the company the flexibility to make bold investments into areas like artificial intelligence and autonomous vehicles. Alphabet's self-driving car project, Waymo, is already generating revenue through its autonomous taxi service, and the potential for future growth in that space is enormous. As we look at Alphabet's future, it's clear that the company is well-positioned for long-term growth, whether it's in search, cloud computing, artificial intelligence, or self-driving cars. Alphabet's innovative spirit keeps it ahead of the curve. However, this doesn't mean that investing in Alphabet is without risks. The company is highly dependent on the advertising business, and any disruption in that sector could hurt its performance. Additionally, regulatory pressures and competition in critical markets, such as cloud computing and online advertising, are ongoing threats that investors should not ignore. At this point, if you're enjoying the content and finding it useful, don't forget to subscribe to the Money Ocean channel. Subscribing helps us bring you more insights into the world of investing, so make sure you hit that button below. Now, is Alphabet stock a buy right now? The answer depends on your investment strategy. If you're a long-term investor, Alphabet might be a great option. The company's dominance in key markets, combined with its continuous innovation, makes it a strong candidate for future growth. Its financial stability means that Alphabet has the resources to weather most storms, and its diversified portfolio reduces its reliance on any one segment of the business. However, if you're looking for quick gains, Alphabet stock might not be the right fit. The stock's price is already high, reflecting the company's strong performance and optimistic future. But high prices mean that short-term profits might be harder to come by. Additionally, the risks associated with regulatory scrutiny, global market volatility, and competition from other tech giants should give pause to those seeking rapid returns. For risk-averse investors, the volatility in the tech space might be a bit too much to stomach, especially in the short term. In summary, Alphabet remains a titan in the tech industry. It has built an empire on search, advertising, cloud computing, and emerging technologies like self-driving cars. But even giants have their vulnerabilities, and Alphabet is no exception. Regulatory pressures, market competition, and economic factors all present real risks that investors must weigh carefully. If you're a long-term investor looking for a company with a proven track record of innovation and growth, Alphabet could be a solid addition to your portfolio. But, as always, investing carries risks, and it's essential to do your own research and consult with a financial advisor if needed. Before we wrap up, don't forget to like this video and subscribe to the Money Ocean channel for more deep dives into the world of tech stocks and financial trends. Your support helps us keep bringing you valuable content, and we've got plenty more to share, so stay tuned. Thanks for watching, and see you in the next one.